Most people believe the Federal Reserve controls every U.S. dollar in existence, moving levers that shift the world's money supply in perfect synchronization. It's a comforting thought because it implies someone is in charge. But there is a $100 trillion ghost in the machinery of global finance. It is a currency that looks like the dollar and spins like the dollar, yet the Federal Reserve has no power to print it and no way to truly count it. This is the Eurodollar, the most powerful financial system you've never been told about, a shadow that runs the world while remaining invisible to the public. To understand why this matters, you must stop thinking of money as paper and start seeing it as a ledger entry. In the 1950s, the Soviet Union moved their U.S. dollars from New York to a bank in London to avoid having their assets frozen by the American government. The moment that money landed in Europe, the Eurodollar was born, a U.S. dollar held outside the U.S., beyond the reach of its regulations. Bankers quickly realized that because these dollars weren't on American soil, they didn't have to follow reserve requirements. In New York, $10 only allowed you to lend 9. In the Eurodollar market, you could lend almost all of it, creating a machine that manufactured credit out of thin air. By the 1970s, this offshore market had grown into a global, private, and unregulated ledger system that became the plumbing of the world. If a Japanese manufacturer buys components from Germany or a Brazilian firm needs a loan, they don't use yen or euros. They use Eurodollars. The world doesn't run on the physical greenback. It runs on this offshore shadow. The uncomfortable math reveals that the volume of these offshore dollars now dwarfs the actual money supply inside the United States, likely being 5 to 10 times larger than the official USM2 supply. Because it is offshore, no one, not even the Fed, knows the exact number. The Fed operates like a gardener controlling a small backyard, while standing next to a massive, hidden dam managed by private banks in London, Tokyo, and the Cayman Islands. When the Fed raises interest rates to fight inflation, it is a public performance in a small room, while the Eurodollar market is the entire building. The system's greatest weakness is trust. If banks stop trusting each other's ledgers, they stop lending, and the global supply of Eurodollars evaporates. This is what happened in 2008, a heart attack in the Eurodollar system where the plumbing froze and banks worldwide suddenly couldn't find the dollars needed to settle daily trades. The Fed eventually had to step in with swap lines to save the system, a silent admission that the shadow had grown so large it had to backstop a market it didn't even regulate. The irony is that the dollar remains the world's reserve currency not just because of the American economy, but because the Eurodollar system is too big to fail and too complex to replace. However, a system built on offshore ledgers requires infinite growth. It is a giant machine that creates dollar-denominated debt. If the machine stops growing, the debt cannot be serviced, creating a permanent, structural hunger for dollars that can never truly be satisfied. We live in a world of two economies. The one in the headlines with GDP and unemployment rates, and the shadow, a $100 trillion web of interconnected bank balances. Central banks provide the illusion of control because the alternative is too frightening. A world run by a decentralized network of private bankers operating where no government can intervene. We've perfected a financial system that exists everywhere and nowhere, entirely outside of democratic oversight. The real question isn't whether the Fed will lose control of the dollar, but rather, did they ever really have in the first place?